Welcome back to this multi-time frame forecast. We're going to be going over USD Swiss franc. Now, before we get started, I want you guys to do one thing, and that's just like this idea down below. Not only does it support us, but it also gives others the opportunity to see these videos as well. And like I say all the time, there's more than enough money in the market for everyone. No need to be greedy. So do us and everyone else a favor. Give this video a like and comment down pairs that you want us to cover as well down below. We've been growing quite a bit and we're very thankful. So we just want to make sure that we're giving you content that you guys are interested in viewing or marking up ideas or charts that you're interested in seeing or that you use on a daily basis, for example. So we had marked this one up in the past previously, as you guys can see. So what I'm going to do is just delete everything and kind of readjust this for you guys real quick. 1 second. Okay, so as always, I like to go into the line chart and just quickly mark up critical areas of structure that are relevant to where price is currently at or where it could be potentially going. So just relatively close areas. It doesn't need to be every single peak and valley. You're just looking for critical zones relative to where price is currently at or potentially going. So, and this one, you're able to be, if you guys don't remember how I do this, or if this is new to you, you guys could certainly just mark up any critical area that you think is relevant. And then when you're doing further investigation on the weekly or even the monthly time frame, you can see which areas of structure line up best with your Fibonacci's. I would recommend you do this on one single time frame. So what I mean by that is don't go into the monthly and then the weekly do the same thing, because then you'll just have too many lines. So that's why I do this. And then now we're looking for some basic patterns. Excuse me. So we're looking for some basic patterns. Oops, excuse me. And I don't really see anything interesting going on right now. We do have a major downside, a push to the downside. If we go to the weekly, we could probably see some sort of pattern right here, maybe an ABCD pattern forming, because we look at this wick. It's pretty beautiful, really long, and could be indicative of some sort of pattern that occurred on, once again, the weekly time frame. But for monthly, all we could see right here is that we broke past this critical area of structure and we broke past this critical area of structure with multiple candles confirming that we did break through that area of structure itself. So other than that, nothing too interesting going on here. We can go back real quick and just take a quick look at the fibs of where we would see a potential retracement going, assuming that this area was in fact an area of potential resistance, based on the fact that it was resistance in the past. And let's go to my chart real quick. That's fine. So there's that. However, remember, if we're ever trying to get information of a certain leg, we need to take information from the previous leg. So that being said, if we want information on this leg, we need to take information on the previous leg. And the way we do that, because we're extending beyond, we're not doing a retracement, we're extending, obviously we're going to use an extension tool. So you can use a Fibonacci extension tool, or you can mark up a fib tool that allows you to do both. And you can see that this lines up beautifully with this 127 fib extension for this previous leg, and that aligns beautifully with structure as well. So this is why fibs and monthly time frame structures are so important, because as you guys can see right here, it lines up beautifully. And that being said, this is still going to be theoretical. We don't know definitively whether or not this area of structure is going to be potential support, as in it's going to reverse from here. However, because no, sorry, excuse me. However, we can treat it as such as an idea, turning into a confirmed setup that needs to then later be validated by your entry conditions. But for now, we could just insinuate that this will be a reversal, since we are seeing some consolidation right here, and there wasn't some heavy continuation as we've seen in the past. So that being said, we can use this as our starting reference point, and that's why we're going to mark this up right here. But I'm just going to hide this real quick. Now, the first area that we're interested in is this 38 fib level, and I'm going to tell you why. by going back to the monthly time frame. So look at this area of structure right here. We were initiated, tested, and then if we go down to the weekly time frame, we could see that we were confirmed. So this area is in fact an area of critical structure for us, and that's why we want to take it seriously whenever we're navigating through price in the or navigating this trade, excuse me. So this would be a potential area that we'd be looking for shorts. Now, short-term traders, we have several different options. We can trade right here, like I had showed you guys. Putting your stop loss just right here. Let's go down to the daily just to verify. Yep, stop loss right there. So this would be short-term targets for you guys, okay? And then you can give this a little bit more breathing room too. However, with these type of trades, because they're such high risk, it's going counter trend. It's better for you to just keep the stop kind of short. And what you could potentially do is also do a continuation. So where the stop loss is you can have a limit for shorting as well. So it's up to you. But short-term traders, this is what we're looking at. Now, long-term traders, we're going to talk about this. Okay, so this is what we're looking at for long-term traders. So something like this. I'm actually just going to shift this over just to make it a little bit easier for us when we're getting rid of everything. Cool. So I'm going to explain why I'm setting it up like this now. So remember, this was a critical area of structure. So this was support. We'll just do structure. Monthly, because it was monthly, plus 38 fib monthly. Okay. Same thing right here. This is going to be the 127 extension of extension. We'll just do fib. So it's the weekly leg extension, and this was also critical area of structure. So this was structure, previous structure, but this was on the monthly time frame, if you remember. So that's why this area is critical. And lastly, we have this. TP1. It's a 127% fib extension. And this was on the monthly. So we're going to delete things that we don't need. We're going to tidy this up. So remember, these are just zones. When I have the line set up right here, it's used as a definitive area. But in all reality, these are just really just zones. Okay. So what that means is it ranges. It can be exactly on the line. It can be a little bit more, a little bit less. So just keep that in mind whenever we're actually trading, because a lot of people get caught up on a specific number and that it ends up affecting them ultimately. So I'm going to reveal this other one as well. This is our short-term traders. Cool. So just real quick, you can see we have this, it doesn't necessarily be an exact trend line, but we have downward momentum going on right here. So we got initiated, tested, and then we were confirmed several times over here. If I were to draw it a little bit more accurately, you would see that. But anyways, we are still confirmed at least once. And that means that we have a downward trend going on. So it's better for us, or safer for us, I should say, to trade with the trend. That's why I like to keep the short-term trades right here with a tight stop loss, because there's a higher probability it's going to continue in that general direction versus you making a long stop loss and accruing a lot of damage, essentially, when you could alternatively have used that space to gain some pips. So if it crashes beyond, we can start looking for setups as in limits down here as well. There's also continuation patterns that we can go after as well. So just keep that in mind on the lower time frames. For now, we're just talking strictly monthly and structure. We're not really looking much for patterns at the moment, other than that we have an impulse to the downside and we're in a downward trend. So short-term traders, option right here is wait for this confirmation, maybe look on the daily and 4-hour time frame, and we can see some confirmation so we can use this area of structure and bounce up from here. We already have two pieces of confluence going with us, which is telling us that we have a higher probability this will end up going in our desired direction. And then similarly for our long-term swing traders, we're going to be waiting for price to come up to here at a very minimum. It could have a deeper retracement going all the way up to test this trend line once more, but I can see it happening. I can see it going through some sort of range right here until it tests this trend line once again. That's something that I could see more likely occurring. So maybe coming down here, falling, and then jumping up and creating some sort of M pattern, or W pattern, excuse me, which would be a good Fibonacci harmonics pattern for us. If that did happen, that's more theoretical because they have a big drop from there. But anyways, these are two ideas for USD Swiss franc. I am personally interested in selling this particular pair because it is in a bearish momentum cycle right now. So keep that in mind. Make sure your entry conditions are satisfied before trading, and as always, use proper risk. Hopefully you guys made some money this week, and I'll see you guys in the next video. Bye.